Good morning, everybody. It is Wednesday, April 3, 5:25 a.m. It is not 86 degrees outside. It is about 93, and man, is it hot. Sorry, here. I'm just checking out Brayon with his gin and juice hat as he meets Gary Vee yesterday, so I will get you started. Bank of America raises the 2024 Brent crude forecast to $86 a barrel. Get ready to start paying $4 per gallon at the pump for those of you that are not retired military that get called back into active duty. Because, yes, that is going around, and you can go and check all of your documentation. It is starting to happen. Crude, gold, silver, and what's happening over there in the bond market is indicative of something brewing from a very large military scale. I've shared my thoughts on this. We'll leave it at that. Today is Wednesday. Today is beginning of jobs. We get the ADP early in the morning, 8:15. We get Fed Bowman, ISM. But what today is all about is not really the crude inventories at 10:30, not really the OPEC meeting that's going to be happening at 7 o'clock in the morning, but more about 12 o'clock in the afternoon, right at lunch, where Jerome Powell speaks. And nobody has any idea whether or not Jerome Powell will have any comments about what's going on. He did on Friday, shared the video there in the weekend. Wasn't very pleasant, but we'll leave it at that. Tomorrow morning, you have the ECB minutes. Jobless claims, a whole bunch of Fed speakers that are coming in the afternoon and more in the evening. And then on Friday, we have the jobs report. So let's just go over this real quick, right? I'll get you started. On Monday, okay, you had the SPX 5240 puts play. They went 1,300%. Yesterday, actually, I'll pull it up here. Yesterday, we had the 5210 puts. And again, these are for your needing to have interactive brokers to take advantage of these things. But again, over there on Monday, you had everything that set up. Over there on Tuesday, you had everything that was set up, or Monday, Tuesday backwards, whatever it is. And again, you had two 10-baggers on the SPX puts, SPY as well, and QQQ, better than 300, 400%. Bring you over there into Federal Express. Federal Express using the April 5, which many people got active into at the end of last week, down at 30 cents. Trading under 20 cents at the beginning of the week. Over there at 278 yesterday, still at $2. You know, this is a 20-bagger that you're talking about here. These things come around, and I don't want it to come off the wrong way when, you know, somebody comes out and says, well, you told us to get out of the trade. Yeah, well, I've never done a one-on-one call with you, number one. Number two, you're up 1,000% at the very start of the week. And number three, do you eat any food? I mean, do you actually consume food? The reason I ask that is because it takes about 3 months to grow a tomato. It takes about 5 months to grow a potato. A couple of weeks, you can grow a head of lettuce. And you've got the ability with the stock market open 252 trading sessions out of a year that you want to go ahead and accelerate because it's money and it's buttons that you can push, when the reality is that you don't know what the fuck you're doing. And that's the reason you came to me. So calm down. Learn the system. Learn the video game. Because I won't be around forever. I promise you that. Glacier's already setting my retirement together. So I'll get to you here. SPX We got our minus 1% day. We got it. And we only traded a 24-point range. So, as I was saying yesterday, it was a paper move. They did it because it needed to be done. You got your minus 1%. You did not take out the FOMC lows just prior from a week prior to the full moon. And here we are sitting on a Wednesday, heading into Jerome Powell with 3 green weeks in a row, already well below 52, 57, 97, the open for the week. And your QQQ having produced that minus 1% day that it needed to do after going 11 trading sessions and still not breaking down. So here we are. The VIX, we look good. We look good. But that 1451 and right here, your 200-day moving average, these are warning signals for us. And we need to make sure that we hold these levels. We lose, okay? We lose right here where we're at, this 200-day moving average, having gapped up overnight. Again, now we've got multiple gaps. We've got to hold 1451 or we are going to have a little bit of warning. Got another gap over here overnight. Just move you in here. Make sure everybody sees the same thing. And there we are. So we are holding 1451. We look good, but we need to hold that 1451 or they just hand it right back. So that's a major, major watch. QQQ. As I said yesterday, we got down to that 438.38. That is our FOMC chop zone that we were in prior to the FOMC meeting, and then the FOMC meeting reaction that took us up there to the all-time highs, which is a couple of pennies above the old all-time highs, and we chopped around doing nothing, even though we had that fake print from well over a week ago. Well, we got that fake print yesterday, and now we have just gotten one overnight. Overnight, we printed a print here just around 3:56 in the morning at 4:35.05. Apologies, it's exactly at 4 o'clock. 4:35.05 being that fake print. And that fake print represents right on down there into that we can't break area, that 433.50. That's the reason why we named it on that nice clean chart, this fucking sucks line, 433.50. Also happens to be right at the 50-day moving average. So those are your things to consider, is that you're looking at that 50-day moving average, you're looking at that 433.50, fake print. Again, one prior to that, took a couple of days to get to, but indicative, considering that we are in a red week, that we could possibly have a secret code that we are going to get a little bit lower. And that little bit lower on the QQQ would imply on our SPX that we are going to be looking for something into that 51.50, the unfilled gap there at 51.31, 51.17. And oh my God, we would actually be down 2.5%. 2.5% being the biggest decline that we have had in the entire move to the downside, which took place right there, right around Valentine's Day. We had a 2.54% decline. So eyes on the swivel, we are definitely going to be looking at a possibility of seeing down there in that 51.30, 51.10 area. And a lot of you guys remember the traffic zone that was, 51.32 down to 51.11. So eyes open on that. We will see. We will see. The dollar. You look at this chart and you don't see the dollar breaking out. But when you zoom in and you see the way that the dollar's been making its move over the course of this year, you can definitely see the dollar making a breakout move. Holding above the 400-day moving average right now. You see over here on gold, you've got new all-time highs on gold. Extensively bullish move on gold ever since here at the middle of March. You've got a very big breakout move happening over on silver. This is a huge zone to be breaking out of over here on silver above 24. So really, really, really caution over there when you're talking about this stuff. And then you come over and you look at your TLT, and your TLT is cruising into that 2009, 2010 support area. This ain't good. So I keep your eyes open and stop thinking that you're going to be buying the dip, because it ain't going to be all that easy. So over here on SPY, a little bit of a gap overnight from yesterday, minus 2% at 515, that 512, 511, and more importantly, that 510 area. Those would be the zones to be watching to the downside if we do get a break below yesterday's lows. JP Morgan, tiny little move, but it's still not giving it up. JP Morgan has kicked me in the balls. JP Morgan is it's done. It ain't going to happen unless there's a miracle that takes place. And I bring it back to what I said originally when I first started talking about JP Morgan, is on April 12th, when they report earnings next week, I will make JP Morgan my bitch. Just like I did back in January, where we got that 3,000% trade after they reported their earnings. Federal Express, nice move down, but we're still not down into the gap, and we are still not to that main target area, that 267, but a very nice move down. And you can see how it was a nice move down, how your 15, 20 cent 275 options are expiring this week, $2.78 yesterday. Good luck. So I leave you with IWM. IWM, nice break below that 207.21. We got on that 203.69, and I am seeing a lot of respectable people that I have as colleagues who are very strongly looking for that move down on IWM below 199.40. I don't know if it will come this week, but I did get a red flag. I got a red flag. Let me see. I shared it here with Gilly. I got a red flag from Twitter yesterday. Your post was detected by our systems and has had its visibility limited because I put trannies to the 2024 Open. Small crappies are next. Small crappies being the IWM and, the Dow Jones trannies. Okay, the Dow Jones transports have traded since way back here. 1902. 1902. And they were always called the Dow trannies. Always. Until this fucking Dylan Mulvaney bullshit that you guys have, that you've created within the continental United States. And it is the most moronic fucking place to live. Use your passport. Get the fuck out. Trust me. So we're going in today. Jerome Powell, 12 o'clock. Don't say the word trannies. You might offend people. And go get in your garden. It's one of my highlights. Each morning going outside as the sun's come up. Coming out here to check my dragon fruit that I've just cut about a month ago, and seeing all that new growth, knowing that it's rooted right over there. New growth coming around right there. New growth. New growth. Knowing that in a couple years, I'm going to have a sufficient amount of dragon fruit. Same time, same place. Got my bell peppers. Third batch just starting to sprout. Got my eggplants. Not yet ready to transplant, but still alive. And I got my newly planted okra seeds, where, as you can see, Not all of them have sprouted. It's very similar to your trades. It's not every trade is going to work out. Not every one. But if you keep on going and you focus on the good ones, it's all going to come to light.